Afternoon, everyone. Yes, the market is quite eventful on this July 24th. And thank you very much for David and Anka for inviting me to this Synergy conference. Once again, kind of talking through favorite indicators. I have a bunch. One in particular I have shown before that we'll go over. And I'll give first kind of a review of oh my goodness, how I approach market analysis, which is very much multidiscipline. It's not just technical. I use a lot of intermarket analysis and macro, some fundamental quant sentiment. So I do throw a lot of stuff in there, and therefore it's kind of really tough to have just one indicator. I am not selling an indicator, not ever. I am very much critical thinking about the market and why it is moving and how to trade it. I run a service for clients. I'll talk about that in a little bit. And these clients run from beginner, intermediate to advanced, 3 very specific products for each level. And as such, it is not just one indicator. I know that folks are looking for, that kind of easy way. But I actually think the market is a much more complex creature, very, very interesting to me to kind of look at it as a puzzle. And I'm always looking at it as a puzzle, which excites me every day, which helps me get out of bed. I totally love what I do. I love market analysis. And if I just traded one stock, or if I just used one indicator, I'd be bored out of my mind. So this is not, really pitching any particular approach to a off-the-shelf or custom indicator. These are my favorite indicators that I use after I have done my analysis to size up what I call low-risk entry, whether long or short, and some of the tools that I use. So I hope it's helpful. If you have any questions, definitely hit me up in chat. This recording obviously will be available, but a lot of this is obviously looking at trades right now, what has worked recently and where I saw the market going into today and why, etc. So there is obviously an element of this that is just familiarity with market dynamics and seasonality and all the other stuff. But hopefully this will help with your future analysis that you do yourself. So first of all, and I am Samantha LaDuc, founder of TradeOutLoud.com, and you can find us over at LaDucTrading.com website where hopefully you'll check it out. I have been active in the markets since about 2009, actually Lehman Brothers. Yeah, that's it. So, and if you are looking, here's my website. So LaDucTrading.com, get the trade before it happens, because that's very much what I am focused on. Macro to micro market timing calls. I absolutely support active traders, investors, as well as institutions, long short portfolio, all asset classes. And I very much focus on what I can deem a chase, swing, and trend time frame. I do not work alone, so I absolutely offer custom trade engagement, not only with clients, but I also have a team that supports clients, which is really, really cool. And that's specifically options. I will admit we've got a lot of option traders. I am specifically focused on options as well for money flow. That's one of the, I wouldn't call it an indicator, but it's absolutely one of the skills that I have learned over the years that it very much is required for spotting very large positioning in options to help support momentum, long or short. And long story short, I have a whole team of client dedicated subject matter experts. So check out the website at your convenience. My particular focus is really that macro to micro. I come from a tech entrepreneur background, which is to say that I started a global kind of content management services business, and then I sold it when my son had a medical emergency back in 2007. I was very much trying to figure out what I was going to do when he went back to school, and decided I loved this, business brain, and I wanted to study lots of different businesses, since I didn't know what business I really wanted to go into, if truth be told, since I had sold mine a year and a half prior, when the market started kind of acting funny. So it was September 18th, 2008, where I said, hey, something's up. And I'm kind of like, this portfolio is important to me, so I'm going to pay more attention to it. It's literally how I fell into this, and I wanted to meet my 3 kids off the bus every day, and did not want to travel. And that was really, really, really important to me. So I've been literally sitting at my desk ever since. And I love working from home, and my children are now gone, right? They're all gone. 2 in Europe, and they've moved from home. So now I have lots and lots of time to focus on my kids. Anyway, lots of personal challenges, and they feed that whole experience, that trading is a personal experience and journey. So I really wanted to provide an organization. That's what I wanted, a community of folks like me who wanted to share their analysis, their trade setups, but also support clients actively. And I actually assembled a stellar team of 10 contributors, full-time, client dedicated contributors. They're awesome. Some of them were clients that now work in dedicated support roles where they share their analysis, trade setups, and support clients. So I'm very focused on macro to micro, and also bridging the gap between retail and institutional. That's a thrill for me. And these are the fabulous folks that have come along for the ride. And I do not mean this lightly. This is amazing that I have been able to assemble these incredible brains and colleagues. Like we work better for clients when we share, and this is just what we do. I love the fact that we have our very different perspective in how to look at the market. And as I say, folks really need to interpret the market in a language they understand. Everyone is so different in this regard, right? I come at it from very much a retail background. I just explained to you, right? Coming in September 18th, 2008. Craig ran, hedge funds in New York City, moved to Naples during COVID. He was a client and literally said, hey, why don't we work together? What'd you think about it? And we have ever since. This is also a family. James is actually husband of a really, really good friend of mine. I went to visit and literally started, and they lived in Spain. They moved to Spain from the Massachusetts area, and we've been working together ever since. So 6 years. Jeffrey, I could go down the list. The point is, everyone here has a very unique perspective. Hans has managed billions in portfolio risk through options and hedging strategies for funds. I have Bob as an oil trader, and his father before that was an oil trader. Alexander actually was a client, an Edge client for years, and his biopharma analysis and trades were stellar. So he stepped up and he provides all of his analysis, deep dives into the biotech healthcare space. Jeffrey is classical economics. He was a portfolio manager in New York, but his brain is just so large as it relates to bonds and precious metals. Oh my goodness. So anyway, I have Archana, who's worked with me since the beginning, also a client. Mikey, my live trading room coordinator. Tiffany focuses on gamma options trading. Nell on futures. Rithika on Elliott Wave. All of these people I've worked with for years. The most recent is Hans this year. So I have a very, very solid team of contributors that span lots of subject areas and very, very specific ways of how they trade, which I thought was fabulous for clients to kind of learn from. Anyway, so long story short, I'm not alone. I just wanted to get a feel, and you'll see that on the website. And then we try to basically divide up and conquer the different types of clients that we have. We have Mostly, I would say, the club focus, which is where I only offered a service for a long, long time. And these are folks that are more intermediate level, like myself, right, who was basically managing my own portfolio, some small kind of boutique institutional firms. But for the most part, this was really focused on drilling down to my style of analysis, running a live trading room across all asset classes and timeframes. But there was a need for adding in a beginner level. And then I literally had this fabulous, I thought anyway, team that could help not only translate some of my more sophisticated talk, but also support clients as they are learning how to trade, because they need to manage their own risk. They need to learn how to manage their own risk. It's not about just following someone's trade blindly. I never, ever wanted that. So sharing trades is great. I love doing that, but I don't want anyone to follow blindly. Anyway, that is what created, we've got 5 team members that support clients here. We've got 10 team members here, including myself. And then this is very specific because of the hedge fund focus with Craig and Jeffrey. We've got kind of like a new hedge fund management approach and a classical hedge fund management approach. And then myself that tries to bridge the gap and of course time everything. So anyway, this is what it has evolved into. Very, very proud of it. And long story short, that's really my passion, is about helping clients. My thing is market timing. So this is what I do. And this is also about spotting major macro trends. I love to focus on dollar, but especially yields, US yields in particular, as well as oil. Oil has been a little bit less eventful of late, but I had a really kind of popular call back in March of 2021 where I said it could double within 1 year, and we ended up literally tagging 130 perfectly by March of the following year, that kind of thing. I have been in sync with bonds like nobody's business. This has been my absolute bread and butter as it relates to timing interest rates as a way to identify headwinds or tailwinds also for equities. So I did feel very strongly that August 2020 bonds stopped going up. And then, as you know, we had a 3-year historic drop in longer duration bonds that was the precursor to lots and lots and lots of not only yield spikes, but also Fed hikes. And I like timing when they're going to pause. I like timing when they're going to cut. So I'm very focused on macro trends in a big way, and then translating that into a market structure, especially around sector rotation. So this recent rotation out of concentration risk, I like to call it, into value, was extremely well timed. And I've got charts that I can show you for that. But the point is, I really, really like to do this and help clients position. Right now, it's short the Qs, right? And then long safety plays, whether it be staples or, lovely healthcare, which has been doing great, large cap value, utilities, etc. So I'm looking at how all of this interrelates, from currencies to commodities to cryptos, bonds, stocks, you name it. That's my passion for the market. I want to see how everything works. So can you see how one indicator would never, ever cut it? All right. That is kind of the background. I have been on stuff, right? Bloomberg. I just recently had a segment about a month ago where I talked about the rally isn't done yet. And I love to do, that kind of option positioning as well, where as soon as we reached a level of Qs, I said, now we're going to pull back. So I'll show you that. But anyway, I've got, some media attention, which is nice, but I really do most of my analysis live every day in my live trading room, as well as post in our Slack member workspace. My focus for kind of looking at the market has been a secret sauce that, again, is not one indicator, but intermarket analysis. And it's the divergence and comparison of cross assets. Sounds pretty fancy, but it really just helps me identify sector rotation and or outliers that need to revert. So recently I had posted for clients several weeks ago that RSP relative to SPY, which is equal weight SPY, was ready to revert, which would cause pulling down of this MAG 7, or you will, the NASDAQ 100 concentration risk. And it worked really well. I spied that from an intermarket ratio. Anyway, I'll show you another one, another growth value ratio that I also use. Macro is also a backdrop, trying to read when we're going to have inflation, deflation. I recently timed the deflation in the CPI print that we got just a few weeks ago, which was the first negative print since May of 2021. That was pretty cool. That helped very much for my theme of growth to value and such. So intermarket is important, macro is important, sector rotation is important, volatility is important, and I am very much focused on, as I mentioned, option structures. None of those are indicators, right? These are all helping for me to create a really strong market timing call, and then I use my indicators to prove or disprove if I'm on the right track. So that's where I really am focused, just to kind of give you a backdrop. Most folks will be really, really pushing that one indicator approach. And as I've already mentioned, no, it's not for me. And I don't want to complicate it for you. I'm just going to be honest how I work. It works extremely well for clients. It works where I can say with high conviction, right? Or I can say if then, or I can say I don't know. And the indicators that I have that I really like from a technical standpoint are clearly bread and butter. I go over them every single day. Again, live trading room, post my annotated charts, right? Post the stops, the profit targets, because my indicators help me identify the low risk entry. But overall, for me to be interested in a trade, long or short, with high conviction, I have to have a lot more going than just an indicator. A lot more going. It's like the macro, the intermarket, right? That option flow, not to mention a little bit of the backdrop in sentiment or quant, and then absolutely technical. So only one of those areas is really technical, which I know is kind of most start out with technicals, because they can really kind of master an indicator, and then they can add more indicators, and they can layer it on, then they can get rid of stuff that doesn't work. So that's what I'm showing you. For me, chart patterns are really important. I am talking about candlesticks. If you haven't studied candlestick patterns, oh my God, they're awesome. So candlestick patterns are a major indicator. I call it indicator, right? That I use on weekly, on daily, on hourly time frames. They're very powerful, but don't get overwhelmed. Like, pick your top dirty dozen and become master of those. The biggest advice I can recommend is, interpret the market in a language that you understand. There might be 120 candlestick patterns. I picked 12 that I really, really like, and I own those in my mind, so I know exactly when they trigger the probabilities of what happens next. Chart patterns also. You've heard of head and shoulders. You've heard of wedges. You've heard of, trend line breakouts and breakdowns, and, fake failures, what I call fake breakout, fast failures. Those are absolutely helpful, because a behavior of a stock kind of has a repeating pattern, right? So you study chart patterns, very helpful. You study candlestick patterns, very helpful. Core moving averages. This is all the free stuff, by the way, right? This is absolutely core moving averages. For some of you will be like, oh, come on. No, it's really, they're support and resistant levels. All of this stuff is. So, candlesticks create this kind of buying and selling auction. And core moving average, at the core, moving averages and trend lines are just a fancy way of saying support and resistance. The difference is that I use them on multiple time frames. So support and resistance to me, if I put it on an hour and a day and a week, and then I put those 3 charts side by side, I can tell which is stronger. It's always going to be the week. It's like very, very important to kind of zoom in and out. So I find that that's very helpful. Bollinger Bands, hugely helpful. Fibonacci. So if you're starting out in trading, this is definitely where I would spend some time in mastering. And there are so many books. There are so many, free videos. Not all of them are great, but nonetheless, you put in the time, you learn how to use some of these indicators. Momentum indicators and oscillators, there's a lot of interpretation that goes into that. I will show you what I mean by like a stochastics. I'm sure many of you are familiar with stochastics. They're not the be all and end all, but man, they're helpful, right? Overbought, oversold. When you learn how to study oscillators, you become very efficient, right? But they're not the be all and end all. Gap trading, I can't even tell you how much I love gaps. So if you're in my live trading room, you know that I have dotted lines in pink where there are gaps, and most products that we trade are very, very non-gappy products, which means that there's much more sponsorship volume. They're not thin, they're not pink slip, they're not OTC. I don't deal with any of that. But the point is, they're very, very high conviction that when a gap is created, at some point it's going to go and fill that gap. So I'm a big gap trader. I love gaps. Very, very, very high success rate with them as well. So the stuff that it becomes a little bit more, let's just say, tougher. The first 5, I think most people have a lot of familiarity with, or they're not afraid to learn chart patterns, candlestick patterns, moving averages, and anything that serves as a support and resistance band. Momentum indicators versus oscillators. This is also something that folks become a little bit more comfortable with, right? MACD, RSI, stochastics. I mean, most of you know what these are. Gap trading. Okay, you've heard about all this stuff. Learn it, master it to your own liking, and then you can apply it and find it more quickly, and then apply it. Then that becomes your risk management kind of boundary. What is a little bit difficult is to explain volatility, which is down here, right? This volatility, what does that mean? Historical versus implied, put-call ratio. That's getting a little bit more gex, right? That's getting a little bit more into the quant world. And I don't want to belabor the math of this, because I don't belabor the math of this. I actually look for size. I'm not looking for anything small, and unusual option activity doesn't interest me. I'm looking at a chart, and then I will go and find what the largest option flow looks like. How bullish are they? Where are they bullish? Or, are they doing a risk reversal, a finance call spread? Are they selling calls against a core position? So anyway, the point is, I'm looking at volatility maybe a little bit differently than some. It's not a math game for me. It's basically size and extremes. So recently we had a very large rotation from growth to value. It was a 4.4 standard deviation move that created really our present day volatility that it's a beautiful thing. So sometimes it's also delayed. It's suppressed, and all of a sudden it lets go. So knowing that, volatility reprices everything, it really does. It's very profitable to study volatility. And the same thing I just mentioned, standard deviation moves, reversion to the mean trading, all really good stuff. Squeezes. People talk about gamma squeezes and volatility. It's what, beautiful, SMCI up 243%, or NVIDIA, whatever. You can have some massive moves in squeezes, and definitely this is an area where you can spend some time and really kind of master that. But that's it. These are the freebie indicators that I use every single day and I study, and I have studied for years, so I kind of know what to look for. But these are the ones that I would recommend you get really comfortable with. I use one that is very popular, but most do not. And it's the 10-week moving average. And we'll take a look at that when we actually get up into some charts. But before we do that, I just want to reiterate my time frames because they do matter. And for me, when I talk about a chart, I will show an hourly chart. And that is for options trading for the most part. I'm looking at 1 to 3 weeks out. I call that a chase. So we did a lot of chasing today. Beautiful chasing today, short. Oh my God, it was set up beautifully, but I had already had it set up for 2 weeks. But the point is, they are shorter duration, and I use the hourly chart. Swings are more 1 to 3 weeks instead of days, and I use a daily chart, and trends are 1 to 3 months, and I use a weekly chart. Now, if I'm doing this right, if I go into a swing at the right time, and it lasts for a few weeks, like gold miners, since March, it actually turns into months. And if the trend starts out well and it's lasting a few months and it doesn't break the rules, it can last a few years. I've got trades on that I put on in the COVID low area that I haven't taken off yet. 2 in particular are uranium. They've done nothing wrong. So this is what I mean by the time frames do matter. So you, in listening to this, have to choose your time frame. Mine is very clear: chase, swing, and trend. And if they're working, chases can become swings, swings can become trends. But the point is, I wanted you to kind of see that. So let's kind of take a look at what we have here in the day's events, and then we can drill in a little bit more of what I'm talking about with specific examples. And I have to go get my chart now, but let me just show you this. Okay. Oh, I did it wrong. All right, you can see this all right, I think. Let's talk about this. All right, I'm going to go back in Tesla. I'm going to clean it up so you can kind of see this example. And I want you to look. Hopefully you can see this where ignore this part right here, okay? I wish I could bring it over. I probably can, can't I? Let's forget about it. Okay, so let's just go from this. This is an example where I want to show you why I was very excited about Tesla a little while ago to use my favorite indicator. And I'll start with that and then we can move on, okay? So let me also show you the trade of the week that was suggested as a very specific example. And all right, so here was a trade of the week that we give for clients, and it was Tesla June 18th. And here's what I wrote, okay? What about Tesla run into earnings on 7/17? It's been digesting the 10-week now for 6 weeks. This 10-week moving average is actually an exponential moving average. I have it on my weekly, and I live by it. Every chart that a client asks me to review, I immediately look how far away it is above or below the 10-week. Critical to me, absolutely critical. Anyway, I had written back here in this kind of June time frame, okay, that it looked like it was done going down. Tesla opened nicely above a 10 and 21 crossover on Monday, and I'm going to tell you that's the second thing I look for. Very, very important. And if you're a client, I have no interest in picking a bottom in a stock. I have repeatedly said, don't sell a new all-time high and don't buy a new all-time low. But if you have a 10 and 21 crossover, talk to me. So then it's qualified to at least look at it. This is absolutely one of my favorite setups. So it has to close above 117 on a weekly and ideally stay above 183 in order to get back above 190, which is the 21 week. That's the I'll show you. And then 194.50 quarterly before pushing into 198, which is the May high. And I'm going to show you the chart, okay? But once it clears this mosh pit of moving averages, it can head to 209, which happens to be the 100 week and the 200 day, hopefully before earnings with a trailer position through earnings with reason below. This, by the way, trade was removed long before earnings, which happened to be this week, and I'll show you why. Once above 209, major weekly resistance before or after earnings, I can see potential to surprise by getting to 217. My upper ultimate price target is 237.40 before bears short vigorously again. Again, this is all June 18th, so a long time ago, right? This is, by the way, monthly trend line from the November 2021 high. We still have to deal with a 200-day that is descending, which is very important if you're a technical analyst. If you're going long and strong, you want an ascending 200-day, not descending. Otherwise, that's resistance. Anyway, I talk about it all the time. It can take months to base before heading higher because of that 200-day. You know what's happening with Tesla this after earnings yesterday, but let me just kind of focus on, I gave some fundamental reasons, right? I really, really, really liked this chart, but it's specifically because of the indicator, right? So I knew that we had a big, beautiful candle formation on the weekly back here at the end of April into the May advance. It pulled back beautifully, and this gray line is the 10-week, okay? And it spent a lot of time here. You can see it was digesting the 10-week. It also had the 21, which is this blue line coming down to meet it. And it was right here where I said, that's a nice doji, which is another, candle formation that does look like it's done going down. And then on this candle, which is basically, again, I'm still showing you on a weekly, it looked great. And here on a daily, I showed the clients, right? This is an inverse head and shoulder, if then. If we can get and stay above, and I gave that level, right? 177, but specifically, that's the low risk entry. In other words, don't let it fall below 177 on a weekly. Why? That was the 10-week. Like literally the bottom of this candle right here was 177. Don't let it fall below that or this won't work. It's not ready. Long story short, did it hit 237? No, it blew through that, right? I mean, it completely blew through that. It hit all the way back up into 265, which was the prior December 2029. Okay, so now let's take a look at that right up again so you can kind of see what I had written as a trade, and it somehow has disappeared on me. Oh, duh, got it. Okay, so this was, and Archana, by the way, also contributed her analysis and her option trade. Rithika contributed her analysis and her option trade. Tiffany contributed her analysis and her option trade, all from a gamma or GEX perspective. Rithika is Elliott, et cetera, et cetera. So here are the trading tactics. And basically I had said, okay, let's try a little July, $6.50 calls, but for more of those folks who are risk aware. And remember, I'm a professional advanced options trader, so I love options. I'm not afraid of options. I said, this is a really good one. This is June 18th. I like selling the August 180 put against the August $200 call. In other words, you're selling this, you're buying this, and it was for scratch. So that was the setup. This went to 36.50, the July $200 calls before I took it off. The Tesla continued to move higher, but it had already hit, right, my 237.40. It was way perfect, way too soon. I just didn't see any benefit. Anyway, that option that I just gave you, that option tactic went up 30,000%. Not 30 times, 30,000%. No joke. I posted it in Swing. I said, okay, you guys can stay long, but I'm out. It actually ended up going to 50,000. So the point is, I love the 10-week and especially the 10 and 21 crossover. And it works like that in reverse too, by the way. So now this is not what I wanted to show you. I wanted to kind of go in and show you some other things, which you can find if you're also looking for, hold on one second, a little bit more of my analysis from a written standpoint, and you're not a client, because I put all of my stuff that is to say clients get all of, market thoughts as it relates to, what are we doing now? Just recently. Hold on. All right. So I'm finding it. Make hay while the sun shines, right? So July 10th, for example, and again, I'm using these indicators also for shorts, had already spied that the Qs likely would move up into about the 504 or 505 area. So on July 10th, I'm like, careful. We're really, really, really getting close. And then I spied a very large option structure that said 5650 is massive resistance, massive, massive, massive resistance. Okay, that was July 10th. Now, as you can't see, but if you were a client, you would be able to see all of this. I also did my intermarket analysis. I'm always referring to the 10-week, the 10 and 21 crossover for longs. I'm also for shorts. Point is, I had some very strong other analysis from options to intermarket. This was a divergence chart of RSP to SPY, which, remember, I just told you that intermarket is actually my secret sauce. This showed that equal weight SPY had already cut through the 2020 lows of COVID, the 2009 lows, the 2003 lows. It had cut through all of it like butter. It was due for a reflexive bounce. And I warned that when it did a reflexive bounce, this concentration risk of SPY and NASDAQ would come back down. And that's exactly what happened. So indicators, not all are going to be the, like I said, I use a whole bunch of stuff together. The other thing that was happening very much besides the post that I just showed you was, of course, timing deflation, which helped that growth into value rotation very, very strongly. I had already had a call that bonds were going to, the bond yields were going to move on the 10-year down into 4.2 and break it. Definitely yen wicked oversold and do a bounce and due for a bounce. Man, did that work. And then, of course, Q spiked into my 504 print and sold off and just kept selling off. And in fact, we reached my price targets today. So the price targets that have been given over the past 2 weeks literally have hit. So keep going, keep going. I will update stuff that really matters. That is about sector rotation, individual stocks, options, volatility, et cetera, and we're not done, right? So this is an ongoing, I use lots of indicators type of thing, but as it relates to the 10-year, I want to see how market reacts to the 10-year above or below. And now I want to show you, since I was obviously very growth to value rotation focused, I not only timed this pullback with precision, but also said, be safe, right? Safety pays. Like, take a look at everything. XLV, it's above the 10-week. XLK, SMH, all the stuff that you're used to is now below the 10-week. That's bearish. So it has to stay below, obviously, but the point is that's where trend reversals are made. Going along above and going short below. Long story short, it has been a very, very helpful tool. And then whenever I post ideas, I'm using an annotated chart, and I'm typically pointing to that area, which is very focused on 10 and 21 rollover. So what do we have today? And let's see what I've got here. Hold on one second. Yeah, Chase is right here. Yep, few days. It can go into a few weeks, but typically not. And there we go. Hold on. All right, so what did I have? I'm trying to find my chart here, but it has disappeared on me. Ah, there it is. So sorry. All right, so one of the things that I did for clients was this, okay? Back here, I had a fib level. Remember we talked about fib level? I said, we've tagged an area, this kind of 504 area. Be careful for a pullback to the 10-week. Then I'm going to kind of show you what I saw forming and posted for clients. We get below 496. My lotto short for last week was 479. With an overshoot potentially to the 10-week. This is the 10-week, by the way, right? We bounced. We got rejected on this Keltner channel, broke back below 479 and reached my price target, which was the prior high in June. We've now reversed 2 months of gains, right? In just 2 weeks on this evening star reversal. So see how I've already shown you, first and foremost, a pattern, chart pattern, using candlesticks, and I could predict it because it's a doji, and it's either followed by a very strong sandwich or an evening star reversal in the same way you can also have the reverse on the downside. So you got a channel, you got a pattern. You also have a 10-week tag potential. Now this has not broken trend. That's what's so hard for some people to understand. I'm still on the weekly time frame, right? So I had given clients this 468. Why? It's a gap fill. Remember, I also talked about gaps? Exactly. So I'm showing you a candlestick formation. I'm showing you the 10-week, which is the price target at least. I'm showing you that we had a gap we would very, very likely hit. I'm showing you there's a trend line also as an area for a price target. We also gapped down here. The point is we have a lot of signals that charts are telling us, I strongly believe anyway, from a fib level, right, to a reversal pattern, to gaps, to options, to it goes on and on. So anyway, I share with clients all of my indicators, and nothing is custom. This is all right off the shelf. This is what I use on a weekly. This is what I use on a daily. This is what I use on an hourly. And we have a fabulous time with chase, swing, and trend timeframes because I have gotten very accustomed to the technical indicators that I just shared with you. And in particular, the 10 and the 21. And that's next, by the way. Very, very likely that it's next. So that's answer to your question was, hold on. You want the Holy Grail. Yeah, good question, Danny. Ask Sanjan, my developer. Mikey looks like Brett Favre. I'm going to tell him that. He actually, he worked on oil rigs for years. And he's a phenomenal trader, but also my live trading room coordinator. He's awesome. Please define chase. I did. Chase traders, traders who typically trade within time frame. Okay, thank you, Ryan. Oh my God. And the snapback. Okay, and a weekly QQQ flag pattern. Okay, so now, yeah, that's a really good question. Very good question, Tim. Tim says, okay, so now that it's hit, right, this 465.74 or this 468, which was clearly a gap, we now have 2 gaps above. So at some point, this will fill the gaps, but not just yet. And as you also notice, I have a stochastics here, right, which is, again, hourly, it's on all of them. It's still rolling over. But here's what I actually really like to do, which is not so common, but I'm going to show you this. And clients know, but just, to get a specific feel, when we have a momentum higher, I don't fight it. When we look extended, I look for a turn. I don't get ahead of it. I look for a confirmation of a turn. Really, I do. The only reason why, let me just grab something real quick. There it is. I annotated this chart already, so I want to show you. It's not the one. Here it is. So the only reason why I got really excited about this pullback, I'm showing you right now a growth value ratio. That's part of my intermarket stuff. And it really is. It's IWF to IWD, and it looks ugly, right? Why would you, use this as a tool? Oh my God, this is so good. So this right here was November of 2021 high. I know you can't tell, but this was a big deal from the January low into the November 2021 high. We pulled back a little bit into April, and then in May, everything just took off, hot fire flames, right? May, oh my goodness, June, oh my goodness. And then I literally had just posted on the 10th, I was worried. I think it's time, right? And I specifically referenced that very, very large option that I saw at 56.50. And my Qs had hit my fib level of 504. Call it lucky or good, whatever. Next day we rolled over, and we have continued to roll over. So where are we now? Here. So this was the November 2021 high. Here's where I literally warned right before the day it busted, and we busted hard. And this is before I came in and to talk to you this morning. I happen to dig ratio analysis. It's not everyone's deal. It's fine, whatever suits you. I had a little, stock bond volatility ratio analysis I showed clients, and I said volatility is not done, but then I will go in and I will look at the chart. So I can also say, okay, here's VIX, right? And I literally posted for clients where I said, we're going to hit 1650 and pull back. We're likely going to break 1488 into 1449, and that's where it's going to get supported. It is textbook technicals. Here is your 200, right? Here is your 200 in green. This is a monthly level. It's where we got above the 200. It's just textbook. So I love the 200. This is true. Over here, you got a 10 and 21 crossover, which is dangerous for VIX. I gave my upper levels for VIX, and anybody who says you cannot technically analyze VIX, bite me. I have done this for years. I love technically analyzing VIX. This is exciting for me. I have no problems with it whatsoever. Anyway, long story short, VIX is bid now, but first, before VIX got bid, we had sector rotation. We had growth into value, and that's very important. So there's always going to be, in my humble opinion, I'm trying to find the line in the sand, there's going to be rotation. In lieu of rotation, once the money stops kind of rotating, then there's volatility. And why is this, you can also see the 10, by the way, right? Came down, it's still supported, got a little bit below, and then boom. 212 is this area of key support on a weekly for the IWM, of which we all know 40% are unprofitable. So pick the large cap value, which are profitable. It's okay. Anyway, the point is, this is very much my secret sauce of looking at technicals, very consistent on these time frames, very much looking at the rotation that's going on underneath the surface, and or if volatility is done going up. And this is the result we had this morning, right? Very, very, very profitable. Chasing Tesla even short from the open. Several clients have been already short AMD and Meta, after earnings or, into this pullback for the past 2 weeks. But I think the point is that unless you kind of get comfortable with interpreting the market in a language that you understand, everybody has their approach, right? Craig is much more macro, and I am more focused on sector rotation and technicals and my intermarket, secret sauce. I look for things that maybe others wouldn't, because I'm excited about outliers that revert. And I want to understand what's going to happen with the volatility that is not allowed to go up, right? Yield curve is suppressed. Credit spreads are compressed. The breadth destruction that we had as the concentration rally took off was only visible if you compare it in a ratio. So of course we needed to revert. So this is the kind of stuff that I really like, and indicators that most will not use, like my gold miner bullish percent index. You can see it's very bullish since March, right? I mean, gorgeously bullish since March. So these are the things that I'm always looking at. But the one absolutely tried and true, besides all the intermarket stuff, right, that I go through and do my intermarket, then I spy the sectors that are most beneficial. For example, you don't see much degradation in, or much selling in GDX, firmly above that 10. Look at that 10. Isn't that gorgeous? All right, XLU. How's XLU doing? Yeah, it's holding above the 10. Not too bad. How about XLP? We're talking defensives. We're talking safety. Oh, XLP is even breaking out. Look at that 10. Look at beautiful. Look at the 21. Okay. Maybe it's not winning any awards, but it sure doesn't look like, ASML. That's breaking. It doesn't look, NVIDIA won't fall over just yet, but the point is SMCI is breaking, Dell is breaking, then you have NVIDIA will break. It's the hardest one to break for all kinds of reasons. Apple, beautiful, extended, however, bearish Harami. And I said, this is great area to short. Keep it below 228.87, next 220. And as this comes down 10 points, SPY will continue to sell, that kind of stuff. So you can still see it hasn't broken any trend. It's beautiful. It's up here. But there are a bunch that have broken. Here's what I want to kind of show you, though. Perfect example. This is boring. Oil and gas midstream player, William Companies. It has just been phenomenal. It pulls back. Again, I'm on it weekly. This doesn't have a big options market, but it has held that 10-week, and marches higher. You don't want to exit out of that stuff. That's gold. I have a whole bunch of scans that I do, and I can show you. Here's another example. Let's just do it randomly. Okay, here, look. Out of how many stocks in the universe? 5,000? It used to be 7,500, but I have a very specific scan, and it includes those that are above the 10-week EMA. I've got 40 in there today. 40 stocks that are doing extremely well. Amgen is already a recommended swing long for clients. AJG is an insurance broker, which is a fave trend long. But let me just show you. Let me just whip through those real quick. I'm going to show you. Look over here. We're getting a little selling in WMB, but it's not a surprise. It's just hit some prior highs, and it's digesting. That's not scary. Honestly, it's not scary. So let's take a look. And in no particular order, except EBS, right, is up the most. Checkpoint, beautiful. It comes back, it stabilizes, it has a relationship with the 50-week, which is in yellow, and then it takes off again. I don't even know EHC. It's a medical care play. Oh, have you looked at medical care plays? Beautiful, right? THC reported today. Look at the 10-week. Fake breakout, boom. Comes back, very, very shallow, and boom. You've got Pfizer, I don't even pronounce this correctly. Lots and lots of consolidation, but it's still hugging that 10-week before it takes off. IP is an example of one that was oversold, moved higher, did a shake and bake, which means it pierced the 10-week, but it hasn't closed below it, and it's still moving higher. So the point is, Amgen, lots and lots and lots of plays. Once they get and stay above the 10-week, they can still pull back, and they're still bullish as a trend as long as they stay above that 10-week. That's all I wanted to say. Even in a down market, check out these beautiful moves. And you can also put on a monthly time frame, right? Look at this. This is Arthur Gallagher. It's insurance broker. They're making money on their money. They love high interest rates. Has this broken any? This is actually a Morningstar reversal on a monthly. Look at that 10-week. Let me get rid of that. Look at that 10-week. Pullback is shallow. Bought, 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 bought. I'm doing this randomly, just from whatever is in I'm just showing you. You want the 10-week, 10-month, whatever, on your chart. If you're a trend trader or a swing trader, period. VRTX, look at this gorgeousness. Look at this. Now, one that I recently worried about and warned about was Eli Lilly. It looks fine. By the way, this is a recommended long at 200. And then recently at 900, I'm like, careful. Because on the monthly, it doesn't look bad, except that it's extended. You put it on the weekly, however, there's your 10-week, right? It was up 12 green consecutive weeks before, boom, shake and bake. And where is it digesting? The 10-week. So I really do value the 10-week on a weekly, on a monthly. And it does correspond pretty well with a 55-day, which is often very helpful to finding kind of price targets. And my point is, there's just a lot that is very productive. One recent recommended swing long into trend was ICE. It did break and came down to the next level, but then boom, right back up. So you're going to have to use a little bit of, let's say, fundamental analysis with technical analysis. This happened to be getting into the treasury market. The trading of the treasury market is the largest, so it's very, very beneficial. It's a great new market for ICE to go into, intercontinental. And I knew that, but it didn't respond with drama, but it was holding that 10 and 21 beautifully. It was actually looking like it wanted to break out higher, and it did. So that's all. I wanted to just kind of show some areas where you can use this long, even when we're having such a dramatic pullback today, right? Major pullback, because we're down 3.5%, and more specifically SPY, which was my warning to clients this morning. So when we opened up, this is actually, I'm going to randomly throw in another little lesson learned that I gave clients loudly this morning of high conviction. This is SPX, okay? I had already last week, as you know, because I had that 56.50 as my, that's it, we're not going above, and 504 for Qs. Okay. I had 5505. See this kind of trend line, right? It's kind of, you know, that looks like a pretty logical place for this to come back, and we hit. And then we had Monday, and then we had Tuesday. We gapped down below today. Now, for folks that were already short, they're doing just fine. But at the open, I said, this is so bearish. And why? Not just because it was a gap, but because we gapped below my price target. We literally opened at 5505.84, which key was below resistance level 3 on the hourly. And I literally said to clients, this does not happen. In other words, getting below resistance level 3 is forced selling. And it has been beautiful and gradual all the way down. Very, very, very unusual. Usually you get to support level 3 on the intraday. It's a pivot point, and you bounce right back up like this, right? We rolled over Tesla and Google. It wasn't so dramatic, right? The market was just, it needs to do this. It needs to just get it out of its system, and we will have a reflexive bounce. But the point is, anything below on resistance level 3 means broken, just broken. So it was a really nice continuation chase. Same thing with Tesla. Tesla opened up, and this was specifically on Tesla because we had this breakdown. Let me just show you real quick. I'm looking for the key, 217. Ah, yeah, 217. Okay, so no, that's not it. I know it's 217. There it is. Okay, so remember this big trend line I talked about, right? All right, so we know we overshot, we digested, blah, blah, blah. Well, when we opened up this morning, we literally opened up at 226.
Hey,
and
Samantha.
all the way down to 217. I said, that's just basically weekly support. But real quick, it's going to head down to the 10-week. 10-week is 212. That's major support. So keep shorting, keep pressing. We're heading to 212. That's how I use the 10-week.
Hey, Samantha. Sorry, I gotta cut you off.
No worries. I just want to say thank you so much. I hope some of that helped. And then, of course, I'm on Twitter, and you can find me there, and LaDuc